Good morning, everybody. It's Chris from Serene Education with the 4 major stance update for the 17th of December 2013. Okay, guys, very important week. Loads of news out yesterday. In fact, more news out today. A very important day yet again for tomorrow, Wednesday, with FOMC statement from the US market. Very, very important. We have a lot of data out this week. In fact, the actual last week of effective market trading before we go into the festive break. So let's looking at the 4 majors this morning using the FX8 Ultimates template, and let's have a look and see what Euro has been doing. Slight pullback over the past couple of days. However, going into this week, in fact, we saw Sunday slightly pulling back, but a bit of buying pressure coming through Euro US dollar yesterday. However, consolidating as we've headed back into those prior highs. What we've noticed is a consolidation as we headed into the prior resistance high that we saw in October. However, there's still strength, or the buyer still wants to favor the upside. However, if you are indeed taking any trades euro against US dollar, just be well aware of the risk involved, because you are trading at a major fib level and weekly high, as well as a major resistance level high. So if you are looking to trade this intraday, just be well aware of the amount of risk you're carrying, because of the fact that you are trading quite close to a price support and resistance level major high. So be aware of that. And this morning we have a lot of CPI year-on-year, core CPI year figures, so a lot of inflation report figures, data coming out for Eurozone, so just be careful about that. We'll also have the Eurogroup meetings. That is an all-day event, so are we going to see a lot of momentum, because the fact that people might be well aware of the Eurogroup meetings. The volatility might not be there. I'm not saying it's not generally going to be there, but on cases where we've seen Eurogroup meetings, we've seen less volume traded, because there's the market's kind of well aware that most of the financial ministers for Eurogroup or Eurozone are actually attending the meeting. So therefore, there's going to be a lot of speculation leading up to what is going to be covered, etc. And we also have the CPI year and core CPI year and year figures come out as well this morning. On to sterling against the US dollar. Here again, you can quite clearly see, let me just get rid of that horizontal line. You can see a price of one resistance level high through September, October. That was breached as we saw more momentum for the sterling against the US dollar rise towards that monthly fib. However, once we got to it, we saw a lot of consolidation, and we are still seeing a lot of consolidation. We did, however, see a slight break last week, in fact. However, price was unable to actually find support above that level and to kick on the daily time frame. Subsequently, we saw a bearish engulfing candle that told us we're going to see further negativity near term, and sure enough, price has dropped through Wednesday, Thursday, Friday. Sunday we saw very little trading, and yesterday, in fact, we saw even less. Very, very indecisive candle. And today on the Asian session, going into the European session open, you can quite clearly see that we have seen very little movement at all. In fact, we're seeing a 3-day support level being forged. So ideally, if we are to see any further pullbacks for sterling against US dollar, we would have to see this intraday support level being breached. You can see the indicator box primarily blue, but a lot of negativity, especially on the R squared, now coming through. So not really stacking up with that buying sentiment at the moment. Now, this morning for sterling, we also have the PPI input month-on-month figures, as well as the RPI year-on-year figures coming out for sterling this afternoon. Well, later this morning we also have the industrial order expectation figures, and then later this afternoon at roughly around 15:300 3 GMT, we have the governor, Bank of England Governor Carney speaking. So there's going to be a lot of people wanting to listen to what he has to say there. So consolidative and a positive trend. However, we are to see any further major highs long term going forward, or buying opportunities, we would need to see the monthly fib now being taken out. We want to see a genuine break above it, and a nice bullish engulfing candle break above that level, roughly ideally above 1646 and change, and then we could start looking to target our August 2011 highs, our April 2011 highs, and then ultimately way up to our monthly fib, which is a very, very nice profitable area of just under 1,000 pips away. So very, very important area now. A lot of pairs are trading into major support and resistance level consolidation areas. End of year, we've got to see a consider. Either way, we've got to see a genuine movement. This over here, we have a red arrow. However, we don't see any red candles, so it still tells me the bias is still wanting to favor the upside. You can see back here again, we had a red arrow. However, the candlesticks didn't turn red. So even though we did see further consolidation or profit taking in this move. We didn't see the overall sentiment change from one of positiveness near term to one of now a negative trend. It was just a pullback and a positive trend, and then a continuation. So here again, it's exactly what we're seeing now. We're just really pretty much trading at a major monthly fib high, so we just got to be well aware that there's going to be more consolidation, and we do need to see a lot of positive sentiment to break through that level now, and to carry us forward for potentially the new year. Onto the US dollar Swiss franc on the daily. Here again, euro moving higher as explained earlier, so you would expect to see the latter happening for the US dollar against Swiss franc. Here you can see a nice clean chart compared to the two prior charts we saw. Here a lot of negativity, and the R squared is complementing a lot of that. We are seeing a bit of positiveness coming through on our intraday time frames, the 5 and 50 minute, primarily because we've seen consolidation. There'll be a bit of buying here as people take very, very aggressive trades off the support level, the weekly support 38.2 level. So clearly bouncing last week on here, moving slightly higher. This primarily painting out a nice morning star formation here, which is a positive signal because that's happening at the bottom of a extended trend, but also at a major support and resistance level. So a nice morning star. However, the bias still favoring the downside because there's no true buying on this. Was just consolidation, profit taking. However, the bias is still favoring the downside. As you can see, yesterday's candle bearish engulfing, taking us back towards those support level lows. So here everything else is telling me to look for lows. However, I've got to see a defined breach of this weekly fib. You can quite clearly see the last week, in fact, we're going into now, has been a very, very noticeable support level. And we fail to break this, we are likely to see less negativity or less selling contracts being purchased and more buying contracts being taken up, and that will lead to a stronger bounce long term. So very, very important. We do need to see a breach, and a breach very, very soon. Are we going to see that from tomorrow's news? When the US government talks about the FOMC statement, there's talk that Bernanke and his sidekicks are going to start thinking potentially of tapering their QE plan, their purchasing plan. If that does occur, that will have a ripple effect through the entire market, the futures market as well as the currency markets, as we start seeing a change in market sentiment from one of very, very biased upside for the US dollar to now potentially one where we could see a change of form. So here, very, very important, especially in the US dollar crosses, to be well aware of tomorrow's FOMC statements news. Are we going to see a change in the stance, the purchasing stance that the US the Fed's had for so many years now? Are they going to start looking to taper on their 85 billion month purchasing plan? That is very, very important. So last chance tomorrow for the US market to give us that heads up. If it happens, then we could expect some sort of outcome. Either way, I want to see a clear objective from the market, whether it be bullish, bounce, then I could look to target back towards my institutional, back towards the weekly fib level high, or bearish engulfing. A lot of negativity for the US market because of that outcome, and then I could look towards my 23.6 to the downside for the foreseeable future going into the new year. And there's a good 670 odd pips to that breakout, so more than enough on the table. However, I want to see a clear objective from the market. So last pair of the day, US dollar Japanese yen. Here again, we had the wedge breakout, and subsequently we had a nice break above the monthly fib. We had a break above the monthly fib back in August of this year, however, failed to really get the momentum from the market to push it higher. When we did get the breakout here, you can see that the Osmo indicator was telling us there was no true sentiment pushing her up. So therefore, what we saw was a bearish engulfing tweezer formation and price reversed to the downside, and subsequently headed back towards the weekly fib, which clearly did, and bounced. So finding support, then breaking high again, re-attempting it. However, here you can quite clearly see on the breakout more positiveness. And when we got the breakout, the continuation, you can see a lot of buying. And subsequently, what we've done now is we've seen a movement to the upside clearly towards our April 2013 highs, or our weekly fib level highs, which are April highs. And subsequently, now we've got there, we can see a change in market sentiment, a drop off as we've been squeezed towards this area. And you can see that price is now really consolidated. You can see the bias intraday is still very much negative. We're seeing more selling taking place, more contracts being sold as we're still at this level, and the R squared is complementing that. However, our long-term sentiment is still one of positiveness. We're still looking for price to make higher highs. We're still very much in a positive move. The US dollar is still much in a positive move. However, FOMC tomorrow, will we see a change in stance? Will there be a change in the US dollar makeup against all its cross pairs? That remains to be seen. But if I was anybody, and it's myself at the moment now, I'm not looking to trade any of this. If we are trading quite close to major fib level highs or support resistance level highs or lows, primarily because we have a very, very strong news announcement that is to follow tomorrow, and that could really put a spoke in the wheels if we do see an outcome either side. So just be patient, bide your time, because tomorrow could very well set us up for the following year. Okay, very important. The stance could set us up for the following year and could set us up to see a change in market sentiment on other currencies across the global market. So very important. That's it. 4 majors covered in a bit of detail this morning. Please, if you are using this particular template or any of our Serene Education strategy templates, please back up with some money management rules. Follow the rules of the template, guys. We built the template to be very mechanical in its approach, and we find it's been so much far superior having something that's very mechanical. So we have to follow the rules. Arrow, candle, the RMO, OSMO, etc. It's very mechanical in its approach, and therefore less mistakes are made. You don't get faked into any trades with no true momentum, and therefore when you do get it set up and it is confirming it very clearly on the indicator box as well as the buy and sell arrows, therefore you have a genuine market move, and therefore you are in profit, and it's genuine profit. Okay, so I'm going to leave you with that. Have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.